Okay, let's just jump right into it. Um, the core thing that I wanted to talk about today is um, the fact that Bitcoin is likely put in a bottom here, which is very interesting for a lot of us here, I would imagine. Um, and I just want to go over the reasons why I think this, and what would invalidate this thought, because like we got to be flexible, you know. We've been in this bear market for quite some time now, and if I actually pull this here, I can check exactly how long. For about 450 days. So let me update this, which is well in line with our previous cycles. Basically, it took in our previous years, it took Bitcoin to about a year to reach its low, which if we actually check here is basically what it took to get to this low from our previous high here as well, 378 days this time, to get to that 15,500 level. And the year before that, it took about 400 days. And we saw a 87% correction in the first cycle back in 2014, and now we saw an 84% correction in 2018, and now we've made about 77%, which is a bit on the low side. So you'd expect, as an asset matures, right, as it becomes bigger, you expect these numbers to go to be smaller, right? So, but you'd still expect this to be kind of within that 80% range. Right now, it's only gone down 77%, which, for reference, to get to 80%, that would be another 15% down from the current lows. But again, these are just a few iterations, and this is just rough numbers, and I don't think it's as relevant. But just looking at this from a time perspective, it would make a lot of sense. From a price action perspective, it makes sense. The only thing that would argue against this right now is people talk a lot about the macro environment that we're in, right? There's a lot of talk of recession, a lot of recession fears. And me personally, while I do think that we can get to a recession, generally this stuff shows itself in charts, right? And what my chart is telling me is that we had a very aggressive bear market, right? In the last year and a half almost, we've come down substantially. And then we had this big dump here, and we had some sideways and down action, and you can see it like essentially losing steam when you pull up indicators as well. And we can see again, this is on a very high time frame. We get that bullish divergence, right? So we see price action making lower lows, and we see the RSI making higher lows. There's divergence, right? And that generally leads to bounces, and now we've seen that. And I think the last time I spoke here, we were still kind of below this 21.5 region. And here I was very much saying this could very easily be a bull trap, because that was the case at the time, right? You're holding it below the most relevant level at the time, which was 21.5, right? Because that's essentially the entire market structure during this entire bear market, right? It's you get a high, you get a low, you get a lower high, a lower low, a lower high, a lower low, right? That's how a bear market works. But we've just broken that structure, right? We've just made a high, a lower high, a low, lower low, right? And now we actually just made a higher high, right? We took out a previous high, and that breaks that structure. And you confirm that. Basically, you're changing trend by coming in and making a higher low. So we've made our higher high. Now we want to see this come down and make a higher low. I've personally already been taking some long trades, but I am looking for a reversal here, and I'm very interested in adding more to my DCA bags, to mostly my Bitcoin. I'm still hesitant on a lot of altcoins, because even when the bear market is over, if you will, right? Like that doesn't mean an immediate bull market start. So even if the bottom is in, it doesn't immediately mean that we're going to go to the moon. And a lot of these coins can still continue to bleed even while Bitcoin has reached its bottom, right? They might not have. So that's kind of a thing to take into consideration, right? So right now I'm just focused on Bitcoin and a select few large cap coins. And this is basically, if you go to a website like CoinMarketCap, basically anything in like the top 50 maybe. Basically, like more like your top 15 coins here are large caps. So this is like your Ethereum, your Binance coin, your BNB, XRP, Cardano, Matic, Solana, Polkadot, LTC, and AVAX, right? From these, there's certain coins that I like a lot more than others, right? Like I don't want to be getting stuff like Dogecoin. Something like XRP is less interesting to me because it still has a massive court case against it, which I do think they'll win eventually. But there's other coins out there that have a lower market cap that are like more upside. So if I'm gonna buy an alt similar project, I'd rather just get the bigger upside, if you will. But coins that I'm mostly interested in is Ethereum. I think this is like quite like Bitcoin. I don't think it's going anywhere. It's like the second largest coin, so it's most likely to stick around after Bitcoin, because a lot of these coins don't come back after the first cycle, and that's something to be aware of. But mostly I'm looking for ETH, Ethereum, BNB Binance, Polygon Matic, and then I have a lot of interest in infrastructure coins. So this is like your this is like Polkadot is a good one. I'm looking for Cosmos, Chainlink, right? So that like these are my main three that I'm looking for on the infrastructure side. And the reason for that is coins like Solana and even Matic to a certain extent, Cardano, Ethereum, BNB, AVAX, they're all fighting against each other to be like the popular layer one, right? So like the blockchain everyone uses. But Chainlink and Cosmos and Polkadot are not necessarily reliant completely on becoming the biggest player in the game, right? They can work with whoever actually wins this the real fight, and that puts them kind of in a safer position than something like AVAX or Solana, where they have to prove that they're somehow better than the other chains. And they got to work to get a fucking an ecosystem people want to use. So Chainlink, Atom, and Dot are my like main coins that I want to be picking up, and then Matic I think is a very solid contender too. For my like large cap alts, and outside of that, like there's some smaller cap coins that I am interested in, but I'm not looking to really buy those right now yet, as I think, as I mentioned, not every coin comes back, and I kind of want to see further into this market cycle what coin looks like it's coming back, right? Because a lot of these are pumped up on the recent pumps, but like even XRP, which didn't actually like die, it's still around. But if you look on like a weekly time frame, right? I guess this isn't quite the chart, but yeah. So while other coins are making very big all-time highs, XRP barely came back in the last bull run. I do think it will actually break this, as I think they will win their court case, and that'll be a big big thing for XRP. To once they win that, that's like a big what do you call it? Catalyst for more upside. But right now, still very strong downtrend, though it is testing that, right? Very obvious trend line, but once you get above that, you take out the 54-cent high, something like this. Once you get above there, that's a very like decent place to want to look for some more upside on XRP. And according to our fibs, if we can get above there, I would say like next cycle we could see like $3.20 on XRP. But as I said, not every coin comes back. I think Monero is still one of the better ones, but let me do Zcash. So this is, yeah, these coins are like basically from previous cycles that were like massive at one point, like top 10 coins, and they kind of just, they're not really relevant anymore, right? You don't really see them in the top anymore. Like if you're lucky, they'll be in the top 50, but it's just not. Tezos is a good example. Like it's still in the top 50, but it's just not nearly as relevant as it used to be. Like sure, they can still put in rallies, but like it's just, there's better things to be putting your money in, and I generally think like people are very when they first get into crypto, they kind of want to get as many coins as possible. They want to get a bit of everything, and I think generally you're better off just getting a few good coins, right? Getting a couple decent large caps that are likely to stick around, and then just look for smaller micro caps, right? Projects that haven't really pumped yet but have some potential, and you just most of them will likely go to zero, but you just get one of those, something like an Axie Infinity, right? I mean, this launched on Binance back in November 2020, and just from that, after that first week, it still went up like 80,000%, right? Or 84,000. Right, you get one of these coins, and I'm not expecting you get a move like that, but you get one of those coins. I mean, even if you got a couple bucks in there, that'll still likely pay for all the other positions, even if everything else went to zero, which probably won't. But that is, for me personally, the way I want to be playing this. Right, I want to mostly just be in Bitcoin, a few major alts, and then just look for shit coins by the time the bull run starts to get going. Yeah. Back onto Bitcoin, but on the lower time frames, as we've had this big rally now, right? We broke the 21.5 resistance level, which was a very major level in my opinion, as it's the thing that gave us now a higher low on the macro time frame, right? And now we're seeing some slowdown on price, right? I've got some stuff marked off here. If I just get rid of that, you're seeing price starting to slowly grind up, right? It's not really making these moves anymore. It's not sustainable price action, right? If you're going straight up, it generally can come straight back down. So I am being cautious here, but the thing I'm mostly watching for is I've been trading this short-term range, right? For the last 10 days or so, it's been in this range of a couple percent. I'm currently watching for this to retrace to 21.5, and if I can see it holding there, I'll be looking for this to I'll be looking to pick up some more Bitcoin and maybe take some longs on a lot of things. Yeah, if we lose the 21.5 level, I think we most likely come back down to around the 19 to 18.3 area. And this will have been like a big, some say bull trap. I mean, yes, technically a bull trap, but I do still think that we can come back to 18.5 and still hold this as, right, a higher low. But again, time will tell on this whether this holds as a bottom. But I do think even if it's not the bottom, I think we're very close, because high term time frame indicators are very much showing signs of that. And I'll hop onto one of those in a second as well. But I've marked off this big red box here, and the reason for that is in the coming days we have some very some very big news events for the macro economy. I mean, just today we had EU GDP, which isn't as relevant for markets, and tomorrow we get EU employment and inflation as well. Might have some effect, but generally it's not too relevant for crypto. But what is very relevant is that if we look all the way at the bottom here, we have the Fed interest rate decision. And when the Fed or the FOMC or whatever, when they speak, the markets move very aggressively. And we're just basically waiting for that to happen here. And this happens tomorrow at 20 CET. So like tomorrow, but then an hour ago, basically. And when this happens, I strongly recommend everyone to not be in very high leverage positions because it'll likely wick fucking every direction to stop everyone out before really making a move. But I expect this to be either the thing that just straight up pumps us back above the resistance here at 23,000 and takes us up to 25, right? Which is basically our previous highs here, 24.4 to 25. Or what I think is more likely is that we get a retrace, we break down the lows, we get back to 21.5, and from there we'll have to kind of reassess. But if we break the low and we get a retest, that would be some more shorts. Or if you don't short but you're just in Bitcoin already, you can sidestep. So basically, you'd sell your Bitcoin position here, and you'd basically buy it back here or here, right? And I mean, the risk with sidestepping is that like obviously dollar value can go down, but generally at this point of the market, I'm just looking to accumulate as many coins as possible, so as much Bitcoin as possible in this case. So I'm just getting, if I measure this from here down to there, that's an extra 13% Bitcoin that I can have, that I can buy back here. The risk is, of course, that it doesn't get to your next buy level, and you need to be very clear on where you're saying this sidestep is invalidated. Say it does something like this, like you get back in here even if it's for a slight loss, right? You do gotta say that. But the sidestepping or shorting is something I'm very interested in whenever we break these levels. So the same thing here. If it'll give me one right on the retest, these are the safe entries. Alternatively, if we hold this and we still start showing signs that are breaking the, like, basically breaking price action here, like highs, forming lower highs and higher highs, I might be interested in like just picking up more and more Bitcoin. Because again, if we hold this 21.5 region, that would be, while a very small pullback, it would be some form of pullback, which is healthy. Yeah. And I have here, let me load this up. We go to Bitcoin on the high time frame, the weekly. Okay, I've marked shit off here, so I'm gonna use this one. Actually, no, I need to use this one. Let's go to the monthly, and let me delete 12 drawings. Great. So what we can see here is we have the Bitcoin chart on the monthly time frame, and this goes back to basically 2011. And I have a stochastic indicator, or stochastic RSI, on my chart. It's a specific one, so the settings are a bit different. But essentially what we can see here is how the stochastic reacted at different points in the market. And what I'm specifically looking for is when we got to these extremely low areas and it flipped, what that meant for on price. And you can see here, this was the first time it flipped. This was back in 2015, and you can actually see we put in the low. I mean, it was already gone for a while, but we did put in the low at that point, and we never came back there again. Right? It was just up from there. We had a little bit of a test down here on this one red candle, but it never actually broke that low again. Then again, we're seeing here, here was the next flip. This was right after we put in our low in December 2018. You're starting to see that breakout. You see the stochastic flip up, and we never came down there again. And now what are we seeing? We just saw this flip right on this candle, and this closes tonight. So in like a few hours, 3.5 hours basically, this monthly candle will close, and unless this gets below 18,000, we'll get this flip signal. And as you can see, the last couple times this happened was indeed the low. We also had another one here in coming out of March 2020 where we had the flip. You could consider that a low as well. And we had one here, which I don't put too much weight on because the indicator wasn't properly working yet because there's not enough back data essentially. But it is. It's basically been very accurate in timing bottoms, and not exactly on time, but it's pretty close in terms of price. And that is just another reason to consider this as a potential low, and not to get caught up in the fear of it all, because that's something you see a lot in crypto. If you go too much on Twitter, you'll get all the people being like, oh, it's just a bear market rally. And I mean, I said this as well, but when we were still below 21.5. But again, the important thing was being flexible, right? Because as soon as we broke 21.5, I started looking like this could really be the bottom. So let's go look for reasons why this could be the bottom. Instead of just being too bearish and never actually getting and just already being up fucking thousands of % on everything by the time I realized, oh, we actually are in a bull market, or the retracement's actually over, right? So that's yeah. Let me something up here. Not that one. Was it this one? Yeah. So there's this very. I mean, you've probably seen it at some point if you're on like social media a lot. But this is basically the psychology of the market cycle, right? Because essentially when everyone's super euphoric and everyone thinks the price is going to go up and everyone's going to be rich, that's generally the top, right? You saw this when we were here back in November 2021 and October 2021. Everyone was calling for 100K Bitcoin, and everything was going to the moon, and that's your top, right? When in reality, if you looked at the technicals, if I pulled up an RSI here, for example, you can very obviously see some, even on a monthly time frame, some massive bearish divergence between these two tops. You'll see this going down to a weekly too. You'll probably see it on a daily. Actually, well, yeah, you'll see it on a daily too, actually, even from earlier there. And that's just that on top of hitting many like actual relevant targets based on like Fibonacci and shit. So there was plenty of signs, but people don't care, and they just think they're going to be rich, and they ignore it. So then you get that euphoria, then you get the dip, right? And everyone thinks, oh yeah, it's like that's basically, look on a weekly, that's like this area, right? So it's, oh, I'm sure it's fine, right? We'll just hold this area, we'll hold this area, right? They'll just say every time they'll move the goalpost for whether it's a bull, whether it's the end of the bull market or not, because people don't want to believe that it's the end, right? They were making so much money, and now they're holding it all the way to zero, basically. You get all the panic and the denial, and I mean, like a lot of people, if you were on Twitter a few months ago, or if you still happening really, is the capitulation. Everyone was talking about capitulation. Oh, it's we're waiting for all retail to capitulate, but really, most of retail was already gone, right? The people who were going to leave were basically gone already, and at this point, you know, like this is, of course, all up for interpretation. But right now, this very much is like disbelief, right? I mean, we're just looking at this from a TA perspective, right? All I'm seeing is we just broke a big downtrend, or making a higher high than we did here. But if I'm looking at this like, oh, I've just been bearish this entire fucking year, this must just be another bear market rally, right? Disbelief. And that's kind of, I'm trying to really check myself and not get caught up in the bear market, because I made fuckloads of money shorting this, right? I did fantastic. I loved this. I loved this bear market, just especially when it was this entire part just down. It was fucking free money. But I think like you gotta at some point get out of that bear market mentality and just be move with the flow, right? And in this case, we saw a big rally, and until this gets below like these lows here, I'm not gonna be macro bearish, right? So yes, if I see this pullback, I'm a trader, right? I mean, my average is below 20,000 on Bitcoin, so I'm quite happy with that. But as a trader, right, I can short against my own Bitcoin, right? So I can just, if I see it come down, I'll just short against my own Bitcoin and lose nothing, right? I'll just get more Bitcoin. The dollar value stays the same. Or I can sidestep like I outlined earlier, right? So I'll just play these levels as I had on this chart, right? I'll just play each of these levels one by one. I can delete that. I'll play each of these levels one by one. And so the next level here is if we break 22.5, basically, you go down to 21.5. If you break 21.5, you got a very minor support area at 20,400. I think that's more for like short-term things, or if it really wants to just put in a bounce there, it would. But basically, I think if we lose 21.5, you go down to the range lows here again, around 19 to 18,000. And if you lose 18,000, you come back down likely to 14,000 or somewhere around there. Again, as I said earlier, even if this is not the bottom, I think we are very close. Like there's indicators that say it. There's charts that say it. Like if this comes down again, I think we go like that, right? And we don't. I don't think we come way down. Like people have been calling for fucking 8,000 every time price dropped, there was a new level it was going to. So way back here, I was calling for. I was looking for 24K. That was my main target, right? We hit that. That's when I started DCAing. We got a bit lower. And all of a sudden, and I mean, a lot of people agreed with me on like 24K being a relevant level or whatever. It didn't quite hold against there, but it was kind of the highs from this bear market rally here in July, August. But basically, I started DCAing like right around here, like 23 was my first buy, I think. And we traded up and down for a while, but like somewhere at this point, right, we got to 19,000, and then my target's basically been 14,000, right? That's been like after 24, my main target was 18.8, and I think I still have this if I just pull a trend-based extension. Yeah, so this is how I got like the base targets for this, right? So it was like 23,000 on Bitcoin for my like first main target. You can see the 1 fib there. Then the target was 18.8, 1272. You can see that held beautifully. So that was my second target, and then I had like 14.6 to 14,000. I had a few different things that were pointing in that direction. That would be my third target, right? You could just say this front ran it a little bit. So when we got to 18,000 and we broke that, I mean, when we got to 18,000, people started calling for 12,000, but no one was calling for 12,000 when we were up here, right? They were calling for 20,000 for a bottom, right? And the thing is the lower they get, they keep moving the goalpost, right? because it's always going lower, and it's just people being emotional and not looking at this from uh, like a statistical or a technical analysis point of view. They're just looking for reasons that it's going lower, and looking for reasons why they shouldn't buy, because they're scared of it going down and them losing money, or them not catching the bottom. I mean, if you're in this for the long term, right? It's simple. Don't worry about catching the bottom, because whether you got in at 23,000 or at 16,000, if you're selling, I expect next bull run we hit over 100,000, right? If you're selling over 100,000, it doesn't really matter that you missed that 6,000 move. Yes, that's 40% more that you could have had, but like, you're making fuckloads of money anyway. Why does it matter that you missed that 40%? Like, don't worry too much. Just don't go chasing price, right? Just have some be calm about it. Don't buy in because you think, oh, it's going to go without me. Buy in because you think, oh, this might actually be the start of the next bull run, or at least the start of the next pump, right? So similar to something we had in 2019, right? This wasn't really the bull market, but it was a massive rally, and I'm sure you could trade hella altcoins, so it could feel like a mini bull run, right? And this was 3 months, and you went up 250%. So there is definitely gains to be had, even if there is no new bull run. But yeah, you could say this is the start of a rally like that. But just be responsible. I'm already seeing this get way overextended. So you wait for the pullback. If it can hold support, you buy in. If it can't hold support, you wait. You see if it holds this support, you can buy in, right? And you just play patient, right? Don't be too worried about the FOMO. Don't be too worried about, oh, it's gonna go without me, because that's how you buy in right here. Like, again, this emotion cycle, this happens on low time frames too, right? As soon as people saw this massive pump, right, people are FOMOing in here too, right? And it's similar thing. I mean, it's not as aggressive or as obvious, but you get these similar emotions in trading too on the lower time frames, right? So it's just be calm, cool, collected. Yeah. I think that's enough of Bitcoin. Ethereum is, of course, I talked about this as well. Like, this is the second most relevant coin in the ecosystem. And this did just break out of a big wedge on the top side, and now it's testing supply or horizontal support, resistance, whatever you want to call it. That we started here in May. You can see it bouncing there. You can see it holding these highs here, this high here. So this is a very relevant level for ETH, right? Because this is the level that's stopping it to change that market structure the way Bitcoin did, right? Bitcoin made the higher high, they can make higher lows. ETH has not yet put in a higher high. So again, as I said, Bitcoin can start a rally without all altcoins immediately following. Like, they can still bleed against while Bitcoin is going up. Though oftentimes they do, of course, pump with as more liquidity enters the market. But in this case, I'm very much looking for ETH to, I expect it to pull back similar to Bitcoin. It has a minor support level here. But again, as I say, that's minor. That's just these, basically the neckline from this big head and shoulders we had back in August, and this low consolidation candle. That would be like the most bullish retrace, I think, if I pulled my fib on this. Yeah, so you can see that coming down to my golden pocket here. This would be like the most bullish or more immediate pump retracement, is to see it come down to this area around 1460 and put in a nice rally there, and basically you can take it back up to the high, into that 1272, so around 18.5, and then you've taken out, you've taken out this high, you've taken out that high. That would be like good signs of the start of something. And then when you really take out when you take out this high, I mean, this is a lot more major than the 25k high on Bitcoin. When you start taking out the 2000 level, I mean, that's when you kind of know you're very bullish again, or most likely. I'm not saying it can't just fucking hit 20,000 something and then 2,000 something and then dump straight back down, right? I can't predict the future. I can only tell you what's likely to happen, and the way I trade this is level to level, right? But again, as with Bitcoin, if I can see it hold this level, I will be looking to buy some ETH. If it pulls back through this level and it comes back to here, I will be looking to buy some ETH, right? I don't have much ETH right now. I have like a couple $100, which is not a lot for me. But I will be looking to add onto my ETH bag on pullbacks, because it's the same thing as with Bitcoin. I think we are starting to see the signs of a greater rally, and until it gets below certain levels, it's perfectly valid. And I'm not as a trader, right? I can short this down to here, and I'll look to long if it starts looking bullish there, or I can short it down to here, and if it starts looking bullish there, I can buy, right? So it's just playing these level to level, and again, as I said, this one's kind of a minor, but if you do see it holding around that 14.6 level, that would be, once you start seeing some like, I guess, bottoming action, or you start seeing it turning up a bit, that might be like a good sign of like, yeah, this is just going to continue. Yeah. So yeah, 14.6 is like 1460 is like the most bullish retracement for ETH for immediate continuation. Otherwise, you have like 1360, which would basically just say that it's in this, would likely just be in this range, right? And then you'd have to wait and see if it's going to take out this high. Whereas if it bounces straight to here, I feel like it's more likely to take out that high, if that makes sense. Alternatively to it holding 1360, it could just come back down to this trend line, and if it breaks this trend line and you get a retest, you're basically looking to break these lows from 18th of December, and I think at that point we're seeing 3-digit ETH again, likely a new low, because this is sorry, this blue line is the base support for ETH. So this is like a central support line that ETH is traded around. You can see that I started this from a wick back in August 2017, and you can kind of see how it follows along that line, and when it gets too far from it, you can see it's kind of bounced back to it. So we had a big bull run, came back, bounced a little around it. I mean, it didn't really exist here yet, because we're using retroactive data. But then it rejected around there, traded some more, rejected around here again, broke off it, retested on that candle. This on a weekly, by the way, so this is like a very high time frame. But yeah, you can see that wick down to it, kind of confirming your upside. Get this big bull run, head and shoulders pattern, right? Topping pattern. Come straight back down to it, and then we had a big bounce, and now actually we had a bit of a falling channel, falling wedge, whatever the fuck, come out of this, and now we're starting to see a bounce out of a different trend line, which would make this into a bit of a wedge. But again, it's held this support line beautifully, but if it loses that, that's kind of like next target would be probably 800-ish from like our major high there, and other than that, there would be much until like 500, like a very minor level 600. Yeah, like 500, you get this high here, Um, and I mean, I think this is like absolute low. I don't think it would ever. I don't think if ETH is going to come back, I don't think it's going to go to $400. But you know, you never know with crypto. Because I mean, this was in the first cycle it went through. It was minus 94%. Right now, it's been holding like a champ with being down only 82%. But if you get a similar retracement, that would put it like around that 400 mark. Which again, I don't think is very likely, but we plan for both scenarios. I just think the important thing right now is to be open minded and to just be able to move, right? If you get the retraces, looks like it's holding a bit, just buy some. And even if it doesn't look like it's, even if you don't know TA, you're not sure if it's holding or not, right? If you're getting these retraces, as I mentioned before, I've been buying since 23,000, and because I'm DCA, right? Even if this gets down to 14,000 or 12,000, right? I'm bringing my average down every time I buy around here because it's like a long time frame thing. So even if I bought some here at 19,000 and I didn't do anything with it, right? I just held it and didn't trade against it or anything. I'll be down on that like 40%. Yeah, rough, but I mean, it's crypto. You're looking to make fucking 5x that in like the next cycle, and that's just on Bitcoin, and that's not including any fucking shit coins that you might be trading. That go 10x. Yeah. Right. Let me mark this off again because I got rid of it. Because that is when the FOMC meeting is happening, and that's when you can likely see some big action. Also, the reason the box is bigger than even when FOMC is there is because the day after, so February 2nd, we get EU interest rates, and then the day after that, we get unemployment from US. So that's U.S. employment again is more relevant for like U.S. markets are just more relevant than EU ones, but still that unemployment rate for U.S. is again a big catalyst. While generally I don't think these numbers really matter that much for the actual moves of the market, generally price action will slow down leading up to these events, and then just make a decision and with loads of volume coming in during these events. So you'll see, you could see a very bad federal funds rate and still see a pump happening, or a very good one and still see it dump, right? People are expecting a 25 basis point hike on the coming Fed interest rate decision, right? But you could see that happening. Everything meets expectations and then it still dumps, or it's better than expectations. They don't only do 12.5 basis points or whatever, and it dumps, right? It beat expectations, but it still dumps. Like it's just a reason for markets to move. It doesn't have to. It doesn't have to be because it's positive or negative, which is why I always tell people don't trade the news, because not only could the news just, even when it's positive, cause an opposite move. Also, it's just you don't know what the news is. You do not have an edge, and when trading, the most important thing is to have an edge, because if you don't have an edge, you're not winning. At that point, you're playing the casino, and you do not win at the casino over long periods of time. I mean, of course, you can win on a couple tries, but the odds are not in your favor, and that's why I don't trade news. Yeah. Let me just go through some of those coins I talked about. Got some like levels that I'm going to delete, but So yeah, Matic is one of the coins that has had very big, a very big rally since the low back in June. So it actually immediately out of that, I think we had like something with ETH pumped really hard. I don't know if that was actually ETH 2.0. I've been doing this too long, but basically it took a bunch of altcoins with it, mostly Matic, because Matic is very closely tied to Ethereum, right? It's kind of a an add-on for Ethereum while still being its own project. So it had a very big rally in like the month to 2 months after that, and essentially got itself into this big range here between 70 cents and I mean mostly $1, right? That's where the main range was. And then you got another target up here at like 130, which is basically the lows from back here from the last bull run when it was, well, when the bear market was starting mostly. But yeah, also here in August 2021, you see those lows, this high here, that essentially formed a big level at 130. But yeah, what I do think is I don't like, I like Matic, but what I don't like so much is buying in when it's already pumped a lot. So I originally actually had my buy on Matic at like 36 cents. And this is a big L on my part. I had my order at 36 cents, but there was some fears around certain stable coins going down. So I was moving my money around, getting swapping stable coins and stuff. So I had to cancel some buy orders I had. And I just missed it, right? It just pumped without me, and I was like, oh, well, shit. And it ended up just going really far, and I missed my buy on Matic, which is very unfortunate. So I only have like, again, I have like 100 Matic right now. I did just take some profit, but yeah, I basically had nothing. It was just a starter buy. So that's sour, but there's always another play. But for Matic, again, I'm not too interested in buying it up here, right? As much as I like the project, right? Like for me, it's more about the chart. And what my chart is telling me is that even if we hit all-time high, or even if we grab our fib target, let's say, oh, sorry. Let's say we go to that 1272 target, right? There is basically a 4x, 4.5x close to that on the table for Matic if I got in here, right? So that's not bad, but there's just better things to put my money into when it comes to alts, right? There's just more interesting things to be looking at for that. I mean, even ETH. And ETH is way bigger, mind you. So the bigger an asset, right? The way these things work is you get a market cap, right? Which basically just the amount of tokens multiplied by the dollar value of the token. And then you get your market cap. So ETH is about half the size of Bitcoin right now. Yeah, ETH can go from where it's at right now. It has that same exact number, even though it's to the 1272, right? It has that same exact number, even though Matic is a 20th the size, right? Matic is 10 billion, ETH is 200 billion, right? So if a coin that's a fraction of the size is like its main target that I'd be looking for is like that many percent away. Now, granted, there's no telling that Matic doesn't just do like way more than that, right? Because generally the higher the market cap, the lower the percentages, right? Because it's way more dollars, right? So Matic being a 10 billion market cap is favorable, right? You want a lower market cap to catch bigger moves. So I'm not saying it can't just go from here to $27 and do a 2000x, right? And then it gets to that ETH market cap, but like I can't bet on that. I can't I can't put a safe target at 2,000% gain on a coin like this. And I'll still buy Matic, of course, but I'm much more interested in seeing seeing if this trades down, and I will actually look to buy some here if it comes down to these range lows again, because as most coins, I do think it's overextended, and I do think alts can bleed a lot, and that includes Matic. So I could easily see this come back to the 74 cent mark, and I'll definitely pick some up there. But if we do ever lose the 74, 70 cent area, I mean, I'm very much just expecting new lows, or at least to test back around that 30 cent low. I think. Yeah. Also, there's a friend of mine has this pattern he really likes, which is a right-angled descending, broadening triangle or something. The name is way too long, but basically, it's like a ascending triangle, right? So, but like inverted. So instead of having it like this, where price trades in this and then you get the breakout, it is basically drawn the other way around, right? In this case, it's like generally it's a big megaphone. So you get like that, right? You get a central, a flat high, and then essentially price trades in between that. And then it holds around here, and then you get the breakout, right? That would be a textbook version of that play, and he's been having a lot of success with it. So a bit of the hopium for me as someone who wants to see Matic go down so I can get it cheap, right, is that it is forming, you can see this flat resistance here. This is on an inverted chart, by the way, so up on this chart is down on actual price, and you can see that descending line there, right? So the hopium for me and him, because we want to get it cheap, is that this is one of those patterns and it does play out, and at that point you have a target of actually I think you can take it different, but basically you'd have a breakout target to like 50 cents or whatever. I don't use pattern targets much, but basically that's the Beara hopium. I don't put too much weight on that, but it is something fun to look at as someone who wants to see it come down. And there's a lot of buys there, of course. Yeah. So for Matic, above the 130 highs, that's kind of like back to bull market territory, which is kind of strange to say when it already put in a 300% rally. But above 125, I should say, that's like your 618 retracement from the previous high to the current low. This would also make sense on a Fibonacci perspective. This would make sense as being the low, because you get that 618, which is the most relevant Fibonacci level, the golden ratio. You get that basically being the low of your previous bull market support, your rejection high here. But when you get a break above that, that would be a very interesting level if you're looking to at least trade some or just pick some up if you do want to pick up Matic and hope for that really big pump. Which again, I'm saying, like, I do think with it being a lower market cap and it just being a very good project, I do think it can put in more than a fucking 380% move from here. Generally on a bear market, you'll see the 1618 hit, which about 900% on this. On ETH, that would be likely similar. Yeah, so it would be a substantially, like a couple 100% lower on ETH to hit that same Fibonacci target. And these trade very closely together, right? Because as I mentioned, Matic is kind of building off of Ethereum. So you can this pump that happened from Ethereum back in June, that's kind of what pumped Matic as well. So they're kind of correlated, if you will. BNB is another coin that I mentioned. This is a similar situation to Matic. I mean, it's not as aggressive, but it also has, put in a substantial rally. I mean, it's a lot less than Matic. at 84%. This is again, BNB is just a much larger coin, so it has about 5 times the market cap of Matic. So it's just harder to move. But from its high to its low, it's been down 73%, which is actually, I believe that's less than Bitcoin actually. Mark that again. Yeah, so Bitcoin is actually down more than BNB in this bear market, which is kind of unusual, if you will. And I think this is largely due to Binance buying their own coin. They do like buyback and burns or whatever, which is like a good way to keep the price afloat. It's like a Ponzi scheme. But yeah, put in a big rally, and now it's essentially just ranging. I had some short targets back here. Those kind of hit like 220. It didn't quite hit the 200 again like I wanted it to. It put in a big rally like everything else did, and now it's kind of forming this rising wedge. And rising wedges generally break down, so they're like most likely to break down. I think it's 65% to the downside or something. Again, the way you trade these is just you get a break, you get a retest, you can get the short there, or you can, if you know what you're doing, you could probably get it on a break, but you're more likely to get caught on moves like this, right? On these fake outs. This one could be considered too, right? These big wicks. These are like fake outs, so generally that's why I wait for retests on stuff like this. I think with the break of this, it at very least comes down to 280 on BNB, if not the 265 range lows, basically. Yeah, above the 330 highs, if you can hold above there, that would be a very interesting level again to look for long positions, or to look to get some for the long term. I don't like. I'm again not too interested in BNB in terms of, because due to limited upside. I do think it's actually one of the safer coins, but there's also the issue of, while BNB does not rely on Binance, it's like people call it Binance coin, which means, if Binance goes under, this is going to tank, right? Even if it can still run without Binance, because they are technically two different things. There's still people who believe that Binance is sketchy and might go under. So that's something to consider there. Also, like, I do think Binance again is a good contender for like hitting that 1618 and actually making a return. But even that is like, it's minimal returns, right? I think Binance does have potential, but it is like already in that upper echelon of coins in terms of market cap, right? This is a fourth of the Ethereum market cap and a tenth of the Bitcoin market cap. So it is less likely to see explosive moves. Though that doesn't mean it can't happen, right? I mean, Solana here at $23 is about 9 billion. But at the peak last bull run, I mean, this was 250, right? So this was 10 times the market cap it is now. So a random layer one that came up and got popular reached 100 billion market cap. I think at the peak, I think Bitcoin was just over $1 trillion, and ETH was again about half that at like 500 mil. Yeah, there is just basically the larger the market cap, the safer the coin. Generally, there's of course exceptions, but the less likely it is to move up. I think you can buy any decent coin around here and likely still be fine for the next bull run, but sometimes they just don't come back much, or don't come back at all. And there's always that risk when you're in crypto. This is why I look to be mostly in Bitcoin right now, and then come next bull run, or when we start seeing real volume coming into the market and real more certainty that this is maybe not the fucking that we're not gonna fucking dump due to recession or whatever fucking reason, that is when you're going to be looking for like smaller cap coins or newer coins that can put in those Solana like rallies, because Solana, right? I mean, I personally don't like Solana that much, but I definitely would have bought Solana, right? When you see this kind of price action, I mean, this went from this launched around under $1 billion market cap, and it reached 80 billion here at the peak. So it looks like there's actually been a lot of tokens printed to some extent, but yeah, it reached about 80 billion at its high here, which is like 10,000%. I would have loved to have some Solana on this run up, right? So it's just looking to get in on some of these like decent coins like early on, and that's like basically nearing the start of the next bull run, or when you start seeing things really come up. That's when you start looking for these smaller coins. So I think gaming coins, they were very popular last run. I think some of them will do very well as well the coming run. Gala is one of the better gaming coins that I like. It actually had a massive rally off some news recently, and kind of basically faked out to the downside on this massive falling wedge, and then is now rallying out of that, which is a good sign of life, because this is kind of until it had this rally, this is kind of the worst chart you can have for a coin for the long term, because it trades like a shit coin, is what I'd say. So you get this massive vertical rally up, right? It just basically goes up nonstop. I mean, of course, it stopped here a little bit, but gets this massive rally up, and then it just slowly bleeds, right? Just slowly goes down and to the right. So this is like a very good sign of life for a coin like this. But I am, again, holding off on buying anything too small, because there is still that risk of coins bleeding, or coins just dying out or not coming back. But Gala is definitely one I'm keeping my eye on. Anchor is also one I'm keeping my eye on. This is in a similar vein as Atom, Dot, and Link. They're infrastructure coins, right? This is something similar. I mean, this offers its own use case or whatever, but this is just a lot lower market cap. Like, I think if we look it up here, Anchor, yeah, this is about a $250 million market cap. So it's about like a 20th of these top 10 coins. A lot smaller than some of them, but yeah. So these are essentially, you go from Bitcoin into ETH into large caps into, I'd call basically anything around $1 billion market cap, like a mid cap, and then anything below that gets into like the small cap area, where you get these kind of coins. And then there's micro caps, which are basically coins that haven't released yet, or just barely released, and there's no no massive backing behind them. But these are the kinds of things that will pop a couple 100% in a day. Or if they really get going, you get stuff like Axie Infinity, where you get 80,000% runs. But most of them just go to zero. So again, risk reward is very much a thing there. Yeah, most of the stuff like that I'm scrolling through here, like just remember, 90% of this is gonna just go to zero, and you'll or it'll just fade into obscurity, right? It's just finding a couple of those coins, just learning some if you got some basic TA, you can kind of see like, okay, is this coin dead? Is it ever bouncing back? Yeah. Right now, focus just on Bitcoin, ETH, and select large caps. Does anyone have any questions? Nope. Okay. Unless, right. Or anything else I should look at, because otherwise I think I went over most things I wanted to go over. Or actually, I got one more thing, and that is my BTC pairings, which I find I very much enjoy. So this is Ethereum versus Bitcoin. So instead of trading against dollars, you're trading Ethereum against Bitcoin. And you can use this to essentially gauge whether Bitcoin or ETH is going to do better. So when this goes down, that just basically means the value of Bitcoin is going up. When this goes down, the value of Bitcoin is going up compared to ETH. When this goes up, the value of ETH goes up compared to Bitcoin. So if you don't want to exit your crypto positions, you can still trade between stuff like ETH BTC to increase the amount of coins you have. So I could sell with ETH like hitting the resistance here, faked out a little bit, right? You could sell your ETH for Bitcoin here while it's worth a lot against Bitcoin. And then when it comes down to these lower levels, right, once it comes back into support, because you can chart this like any other chart, right, you're in a big range here. When it gets to these levels, you can swap your Bitcoin for ETH again. When you start seeing some bullish action on the bounce here, right, you can swap your Bitcoin for ETH. And I mean, if you got out of ETH into Bitcoin, I mean, you just got 13% more ETH if you get back in on the support, right? And that's just without moving out of crypto, you can still like optimize the amount of gains you're getting by looking at BTC pairings. So right now I am watching for ETH to start bottoming out, and it is already kind of, it had an aggressive dump through this trend line, and now it's already starting to trade a bit sideways and down. So that's signs that it's slowing down. I do want to see this at least wick into support here, but if I start seeing some bullish action, I will be looking to swap some of my Bitcoin into ETH and then trade that back up to essentially likely a center target around here. That's generally how I like to play ranges. Take profit around the center, and then I can swap back most of it when you get back to range highs, or if I see it breaking here, I could swap back into ETH. But generally ranges are more likely to hold than not, so I generally look for them to I'm generally more likely to long support than try to look for a break. But if I look for a break, then I generally do look for that retest entry to actually confirm confirm the breakout, instead of having these big fake outs you see everywhere. Though I guess this could be seen as a retest. But you could also just get out. It is what it is. Yeah, so ETH BTC is looking like it's got a bit more falling to go, but it is getting close to levels where I'd want to swap some of my Bitcoin for ETH. BNB BTC is very interesting because, as I showed earlier, like BNB has fallen less than this entire bear market than Bitcoin has. It's been doing incredibly well. And you can see it's been outperforming for a while, and it had a big breakout on this level here. Right now, it's not looking too hot though. So we had a massive rally on Bitcoin here in November 2022, coming into end of year, and then it just basically came back just as hard, and it's kind of like a scuffed head and shoulders. It's basically just a topping pattern. So you could also see it like a falling wedge. But for now, I am starting to see a bit of upside on it here. So I might like get if I can get some conviction, I might actually look to swap into some BNB from my BTC stack, as that can again outperform. If it does fall below the lows here, essentially though, that is where I expect it to trade back to our big support box from previous resistance here, around the 12-cent mark, or 1 cent, 1.2 cent, whatever. It's just basically this purple box. And if it does get below that, that's kind of like where you see BNB kind of bleed out, because it doesn't really, like, it has some minor levels in there, But that might be like the end of the BNB BTC bull run if it starts losing these highs here. And then at that point, it's just more interesting to be in BTC than BNB. Similar thing for Matic. As for ETH, that it has been in a massive range. The only difference thing is here again you have that pattern that I mentioned, the ascending right angled whatever the fuck triangle. This is kind of on a higher time frame playing out like that, so I'm very much looking for for it to break here. Like if it does get that break above these highs, getting a bit of a retest, that would be very interesting to get into Matic instead of BNB. Just swap those over. Alternatively, if you it is setting up kind of to put in a bit of a rally here again. If it does reject here, that's kind of double top area, and that's when you don't really want to be in Matic, and you can take it back down to 33, but ultimately, again, these range lows. And you lose those range lows, then you got your last hopium is the trend line that I've drawn here. And if you lose that, you're coming back substantially lower, and that's not really where you want to be. I don't think that's very likely, but again, we play these level to level. And the S&P here, I mean, it is putting in some very interesting price action here. So it is kind of breaking this big neckline here. So the original top back in November and December was kind of a head and shoulders, right? When you broke that neckline, you broke down, you retested it, made a low, came back up, faked it out, and now made a slightly lower low, which does, if I pull up an RSI, you can, it's already on there. You can obviously see some big bullish divergence coming out of that, and it is forming kind of a inverse head and shoulders, which is basically just the opposite of a regular head and shoulders, which is a bottoming pattern in this case. So if we can see a close and a break and a retest here, and I do really want to see a retest for this in this like higher time frame, right? And a retest could be as much as just a wick and then continuation. Yeah, I do see this as like the potential for like a big rally on the S&P as well. So this is like traditional markets. I don't follow them as much. Like crypto's my thing, but I think at the very least we take out like this basically 4100 level, or I guess a bit higher because you got those open wicks there generally above. Price likes to take out wick highs for liquidity. So if it is going to fake out, you'll likely see it do this and then come hard back down. That would be the bear case. Alternatively, we just hold above here and we get like a mini bull run. And if we still want to be macro bearish, I mean, again, I'll play it level to level, but if we are still macro bearish at that point, basically I'd be looking to, Fips don't tell me much, but I'd basically be looking to play it back to 4,600 and just make it like slightly lower high. Alternatively, we just fucking start a full-on bull run again, and you just ignore this ever happen. Yeah, again, breakout. It might be a decent time if you can confirm this breakout to get back on some stocks. But that depends on the stock. I don't trade stocks, so I don't have too much of an opinion on this. This is just I follow the S&P mostly to see what effect it has on crypto, because basically this entire bear market, the S&P and crypto have been tracking each other to a certain extent. And then the last thing is the Dixie. which just had a massive parabolic bull run coming into October here, and it dumped hard back off and is now holding uh, our previous highs as support. I expect it to at least put in a rally here. I think that's most likely, uh, as it is kind of again support is most likely to hold. Oh my God, Bitcoin's dumping off, and it is bottoming out a little bit. I think this comes at least back up to like a 105 area, or maybe 104. If it rejects around there, that would be like bullish for assets, because if dollar value goes down, generally risk assets go up. So this is your Bitcoin, your S&P, your stocks. But I do very much still think, as long as you're holding this level, and you could even come back a little bit lower, you're still kind of in this macro bull run for the Dixie, for the dollar. So even if it does retrace a bit further, you are most likely gonna like, this is kind of the what was I would say, if it doesn't hold here and it doesn't hold the 98 area, that's kind of where I'd say the bull market for the Dixie is over, and you get back into this kind of range here between 89 and I guess 100. Yeah, as long as it's still above that 98, or even now still above the 102, like, this is still a very strong uptrend for the Dixie. We'll have to see how this plays out. Yeah, now I actually have nothing else I wanted to go over. So if anyone had questions about that, please ask them now, and otherwise I'll end it here. All right then. Well, thank you all for coming. I hope this was valuable, and I hope you learned something, and hope everyone can make some money.